Welcome, ladies and gentlemen. Yeah, it's that nice feeling that, oh, we've got optimism across the board. Trump's being a little bit lenient with tariffs, and there's talks, beneficial talks between Trump and Japan. Everything's all good. Let's just buy whatever we want and let's roll with the flavor. Unemployment claims came in lower. Why is that a problem? Well, it just tells you that it's exactly what Federal Reserve, good old Jerome Powell, was suggesting yesterday. You know, the labor market needs to start contracting for them to really start acting. He said that back in the day, he did say that if the market were, or the labor market were to contract to a 6.5% unemployment rate, then that would grab the Federal Reserve's attention to warrant to cut the rates. But the problem is, guys, they are now accepting that tariffs are going to be inflationary. Even today, Williams, the Fed speaker, said that tariffs will be inflationary. It's going to put pressure on the marketplace. But what you've got to understand is the market will always price in what they think about things now or what they think about the future. You probably find an instance where the market will be going up when the news is bad. Let's just take inflation data itself. The latest reading of inflation came in lower, but so what did the market do? It dropped. Why? Because it's only one reading and it's not really sufficient enough to say that, okay, yeah, we're going to see a reduction in the interest rates. To top that off, they know that tariffs are going to be inflationary as well. So the market then says, you know what, we're not going to like the idea of that. So that's why the market drops. So if you go back to the last CPI reading, you'll see what happened that day. Inflation down was a bad thing. So that leads me over into what we're going to be talking about today. The tariff story is still a problem, and China is trying to get everyone to unite together against Trump. Now, if you remember the old chart from back in the day, allow me. All right, listen. So, says up here, 1929, Wall Street crash, yeah? The Great Depression. Before that, it says 38 nations submit protests to US for high tariffs. After that, bang, the stock market, here you go, down here. Can you see it? There you go, that drop. That drop there, that's what caused the stock market to crash. Now, something else, right? Powell gave sort of the idea, and some of you have commented and said they will never increase the interest rates. They will never increase the interest rates. Bond massacre of 1974, all right? Go back and have a look at that. What did the Fed do? They pivoted. They changed the story. They increased the interest rates when there was the expectation of them to go up. And when you look at this line up here, right, the federal funds rate. Now, listen, guys, you don't get access to this chart. You can't get access to it. I don't think it's available anymore, but this chart was awarded to me by Investors Business Daily because I was one of the earliest subscribers on that platform. We're talking nearly 22 years ago when they first hit the internet and started providing their service. And they rewarded this to me, and mad love to those guys. But this chart right here shows you the federal funds rate where there's always a bit of a contraction in the interest rates. But then there ends up being a situation at 5%, they end up going back up again, okay? And this is the problem that we've got with tariffs. If we didn't have tariffs, me personally, we would be in line with cutting the interest rates. We really would. But as you've been seeing in the actual readings on the CME, you can see that interest rate swap traders, they're continuously betting that the rates are going to get cut. The rates aren't going to get cut. Today's reading would have obviously solidified the idea that they're not going to cut the rates. Why? Because the labor market's doing fine. 215,000 on the unemployment claims. That was less than the 225,000 that they were expecting. So it's going to be one of those situations where there could be something in play that would then lead the Fed to actually increase the interest rates. It could be something, maybe by 25 basis points. But some of you would say, yeah, that's going to cause absolute chaos. It probably would. But then you got to ask yourself the question and say, would it really cause chaos? Because we've got a problem with the bonds market, ladies and gentlemen. Everyone is optimistic right now about what's going on with the trade talks, but the problem is the trade talks can be optimistic one day and then it can break down the next. Something like this with China, look, they're calling for nations to unite against Trump. So, excuse me. So it's already there. We've got clear trade war issues right now. And I'm telling you, there's going to be sanctions. There will be sanctions. Trump is trying to, well, he stopped Nvidia from doing from selling chips to China. Jensen is on his way to Beijing right now to have a conversation with them and discuss exactly what the next port of action is going to be. And this is all for the favor of the dollar. Favor of the dollar. Okay, let's go and have a look at the dollar. Dollar right now is taking a smack to the downside. Your purchasing power is 0. What do we mean by that? Well, if it's below 99, you're not really getting any purchasing power right now. When it's above 100, then you're starting to get beneficiary of the benefit of having dollar. But when it starts to go above 100, so if it's at 110, then you've got effect. Well, let's just do it like this. If dollar ends up at 100.3, okay, that means you've got 0.3% purchasing power on the dollar. If it goes to where we were previously, okay, so let's say where the last high on the dollar, let's go back to quite a bigger time frame. Let's look at this rally over here on the dollar, okay? Back when it was at 8% or 10%, okay? That's 10% purchasing power. And when the dollar dominance was going up, Bitcoin was also going up. Why? Because people were utilizing the fact that the dollar was strong, which allowed them to buy more Bitcoin with their power of dollars, okay? And this is why it's important to have a focus on the dollar dominance, because it tells you how investors are going to approach the idea of utilizing the dollar or not. Right now, you've got the euro trading at significant ranges. Look, that's a very strong euro right now. The ECB has obviously cut the rates right now, so we just quickly go over to it, and you can see, just refresh that. And we get the main refinancing rate that's coming in right now. So that 2.4%. And then, of course, very shortly, we've got the ECB press conference that will be, the actual press conference is underway because it's at 1:45. But there you go. Unemployment claims coming in at 215,000. And of course, the Philly Fed manufacturing index came down at minus 26.4. So we've got a strong labor market because less people are claiming benefit, but we've got a contraction in the Philly Fed manufacturing index. Why is the manufacturing sector contracting? Well, maybe because of what's going on with the tariffs. Companies are starting to maneuver themselves and try and prepare themselves for what's to come. But the sad truth is you all are going to be paying for the tariffs. They're spinning this story about the tariffs are going to generate lots of money and we're going to put all of that money to work, X, Y, and Z. Well, it's going to come at a cost, in my opinion. All your products that you're going to buy are all going to have a markup on them. That's naturally going to end up leading inflation to go up because companies are going to be raising their prices. The core PCE will go up. And then you've got good old Jerome Powell, who's effectively going to get sacked. Trump's got it in for Powell. But I think Powell is just going to say, screw you, Trump. You can't do nothing. You can't do anything. Like, if Trump, I believe Trump could do something, but I don't think he can. I mean, if anybody can enlighten me on that story, but it is a battle between government and the Fed. You know, everyone's been saying that Trump wants to try and wreck the Fed and what have you, but let's just park that negative news aside and look at this optimistic news. Your XRP is going to get a bit cheaper. A bearish signal bull traders hate to see. So we go into it and it looks like XRP is about to just roll over. Don't worry, ladies and gentlemen. XRP is probably going to go from $2.10 to $2.06. That's a bearish market in XRP, in my opinion. The thing doesn't bloody go anywhere anyways. So just don't worry about it. Does it actually say it? Hold on. Let's just actually have a look at where XRP is just for a split second. There you go, $2.10. It's not going anywhere. It doesn't do anything. Anyways, let's just get with the program, ladies and gentlemen. Check this out. It's happening. The death cross. Oh, God, the death cross for stocks, that is. So quickly going over into having a look at that from yesterday. So yesterday's shenanigans in the stock market was the following. This is important for anyone with stock. Oh, they've wiped it. Okay, never mind. Well, the NASDAQ saw a big sell-off yesterday. So let's go and have a look at where we are with the NASDAQ in terms of accumulation and distribution. Let's just quickly bring that up. Okay, cool. So yesterday, NASDAQ took a little bit of a nosedive yesterday, closed at its midpoint, and it was volume below average if you look at the bottom right itself. And just having a look at where we are on the weekly, you can see that NASDAQ is trading into last week's previous open and close, and it's trading quite aggressively below that, and volume is starting to pick up on that basis. Now, you can see up here that you've got yourself a bit of a cross right now where you've got a 50 EMA and, of course, the 200 EMA crossing over, well, SMA right now, but you've got a crossover happening on these moving averages. Now, the problem with crossovers is it just says that So this has all been because of the story with the tariffs and the aggressive nature of how price has moved. And this is the problem with moving averages, ladies and gentlemen. By the time the moving average price is in the story of what's going on, especially on the daily, you've got the daily 50 EMA and then you've got the 200 EMA like that. You then see the trigger of a cross. You then start getting concerned about it, and then you start running your shorts and what have you. And then what happens is price is bouncing in and around here, and then you do actually see the crossover. The 200 EMA comes in, price has made the move lower, and then it reverses. So what you got to pay attention to when it comes to moving averages, you got to look at for when moving averages contract. When moving averages contract, not crossover, but look at when they contract. Because a crossover can happen, but it doesn't mean that it's going to roll over. You then have to look to the candlesticks and say, okay, I can justify the crossover if it trades aggressively away from it. A true crossover works like this. When you've got a 50-day moving average and you've got a 200-day moving average and they cross, all right, the 200 will start looking like this. The 50 EMA will start looking like this, and you'll have this gap, right? This gap would be shown by price doing the following. Dropping away, okay? When it retraces back up, that's the point where you wait to see the crossover is confirmed. You have to wait for that, because the crossover being confirmed here does not mean you have to go short or that's it, sell everything. It's just they're crossing over. Now, because price moves faster than the moving average, given that moving averages are laggard in their nature, you need to wait for price to really give you the demonstration of it actually breaking down. So when price breaks down, you wait for price to retrace back into that moving average by the principle of deviating away from the moving averages, and it's going to come back into the mean. When it comes back into the mean, that's the point where you pay attention to it, because the cross happened over here, okay? And then price moves away from it. Everyone is solidified on the idea that they're going short. They end up getting shaken out, and then it's that point where they say, oh, okay, the cross doesn't work anymore. They start running longs in this area, getting liquidated at the same time from the previous short. And then price marks up, goes into the moving averages, and then continues with the narrative to the downside, because it's now trapped everyone that went long in this area after they got confused thinking they were going short. Now it's forcing them to cover their positions, take their losses, and then it marks lower, and that's when the true trend comes into play. So then we take that logic and go over to Bitcoin and look at it on the daily time frame. We then say to ourselves, okay, then where are we at? So let's just have a look at it. So Bitcoin, you've got the 200 EMA and the 50 EMA contracting. There's your contraction right there. So they're coming together. So you're now waiting for something. If we don't see 3 daily candle closes above the 50 EMA, there's no point in going long. Because if Bitcoin can get above this 50 EMA and start trading into the upper band of this cloud right here, if it can do that and then even get above the upper band of the cloud, which would then effectively take it to the 87,779, you would have then effectively got the logic of a breakout, then the retrace, and then the continuation. So hypothetically, all I'm asking you guys to consider is wait for 3 daily candle closes above this range. If Bitcoin were to go up and ends up closing at 88,000, have you missed it? No, because it's only moved up $4,000. And the way most people perceive Bitcoin is they don't want Bitcoin. They don't want to earn money on Bitcoin from 84,000 to 88,000. They want to earn money from Bitcoin when it goes from 84,000 all the way to 275,000. So even if Bitcoin were to go up towards 92, you're still getting Bitcoin good on the idea that this momentum to the upside is going to sustain itself. Okay? So you've got to really give Bitcoin the chance to do it. Right now, you see Bitcoin is toying inside of this cloud, which is consistent with strength. I mean, I'm going over into the Arkham itself to have a look at the update on the ETF. Where's your NASDAQ? Okay, it's doing all right. Here we go. So we're not really seeing anything. Well, I mean, we've seen 3 hours ago, Bitwise has been maneuvering Bitcoin as such, but it's only accumulation that's coming into play, which is all good. Okay, there's no problem with that. Quickly going over into the miners position index to see what those guys have been up to. Give it a second. Here we go. So miners, they've been selling at bizarre times, but they're obviously trying to raise capital. And of course, with the tariffs coming into play, it's going to be a little bit more interesting with that. But we saw miners yesterday trying to sell a little bit of Bitcoin as prices were starting to move up. So that's beneficiary right there, but not as much power, not that much selling happening, if I'm quite frank with you. 83,000 was the last point, but it has moved away from these lows, as you can see right here in regards to that. Now, quickly going over into the order flow. So the order flow is starting to paint a different picture right now. We've got, and this is what I mean about they are short term with their investing approach to Bitcoin. Okay. Look at this. Here is you've got $11.95 million worth of orders transacted on Bitcoin at 83,200. And then you've got 33 million at 83,100. Now, when you look closer here, you can see that 29.47 million was sold as it went to 84,300. What does that tell you? We make the assumption that this big order here at 33 million hypothetically would be the order right there, give or take. You may have just taken and left a little bit of risk on the chart, or maybe sold it a little bit more up here. Okay, we don't know. But when you've got effectively like for like on the bid order, and then you've got the offer order right there, you can make the assumption that that participant is buying at the lows and selling as soon as he can at the highs. And that's what you're seeing here with Bitcoin. You're seeing them buying and then they're selling as it moves up. We don't want that. We don't want to see people selling. We want to see people accumulating and holding. We want to see all these offers up here show strong concentration of offers where people want to sell the Bitcoin, and we need good news to suggest that people will want to buy Bitcoin, your retailers, your institutional traders as well. And what we're seeing more of is the fact that the bids, if you look closely, this is where it gets interesting. We've hardly got any bids. We've hardly got any offers. And I know you guys have watched me make reference to this chart. There's hardly any orders in there. So volume is very, very light, which kind of tells you that institutional investors and players, they're kind of like on the sidelines trying to work out what's going to happen. So one thing can happen is Bitcoin could actually correct aggressively to grab attention to get the bids in. Because if you look here, this order here originally was for $1 million, but an additional participant came in and added at that point. So someone was there watching that price point and said, you know what, I'm going to get in at that 83,100. Happy days, I'm involved. Right? So that's how I read the CoinAnk. I look at the CoinAnk and I don't look at it from a price structure point of view. I look at the commitment on if I'm seeing an influx of people doing this buying here and they sell it at the first move to the upside, tells me they're short term with their expectations of Bitcoin. They want to get in and get out. Okay? And that's something that we've got to take into consideration. Stablecoins. Stablecoins, in my opinion, is going to take the claim for cryptocurrency. Russia now wants to consider launching a national stable coin, maybe because it's getting sanctions and tariffs from left, right, and center from the US. It's going to now try and do that. And then that's going to effectively open trade for Russia, if I'm quite honest with you, because you can't stop crypto as such. And this is Russia's benefit, that it can still really transact with cryptocurrency. So the stablecoin market is going to be massive. And I'm saying to you again, when Circle comes onto the stock market, get involved in that, because that's going to be a big player when it comes to stablecoin issuance. Well, it aims to be a big player. Tino, you always say that when prices go down, it's because big players, hold on. It's because big, let me read that and put it into perspective. Here we go. All right then. So, Tino, you always say that when price goes down, it's because big players are buying, correct? So why do alts keep going down? This crypto market is a circus. Well, you've got to understand, alts go down. Let's pull up an altcoin. A high liquid altcoin. Let's make an assumption here. Let me just go HBAR, okay? HBAR is it's a brilliant asset, in my opinion, in terms of how it trades. It moves really well, right? But let's just look at the bigger time frames right now, right? The way the market operates is, the best way for me to put it to you is injection, okay? So you've got this maneuver to the downside, right? It's going down, all right? Now, from the incision of this coin, so once the coin actually came into play, let's go to the daily time frame, okay? This coin, when it started, its float per se was down here, okay? That's its float. What I mean by float price in principle means that when it started off as a coin, okay, just to summarize it, market makers have or liquidity providers have like a balance, okay? And they're always transacting on that, right? so that when someone comes and buys H-bar, they're selling it to them, they're selling it, and then when it's rising, market maker is, you know, selling back into retail, and retail, when it's selling, they're buying it off them, okay? So when altcoins keep going down, of course, if it goes down beyond its last low, so if H-bar were to go down beyond this 0.0101 zone, it could continue to go down lower because fundamentally it's not exactly zero. There's a float. There is an amount that they can actually cater and supply liquidity for. Okay. So altcoins can keep on going down and down and down until the point where the market makers like, we're not supplying liquidity anymore. Okay. Now, market makers will exploit any opportunity they can to hedge themselves and take advantage of costs, of fees, and what have you. So an altcoin can keep on going down and down and down. A market maker will be buying it. And then when you get these big cash injections, okay, where it pumps up aggressively, that's where market maker is transacting on that. And he's effectively hedging himself at that point, okay? So it's different liquidity providers that are using retail's liquidity, and then they're doing it for their benefit. Just to help you understand it and answer your question, altcoins will keep going down, okay? And until they stop trading them, market makers will always provide liquidity because they provide a float. And that float will stop when the market maker says no. So in other words, it can keep on going down and down and down and down. They've got a float of this coin. And then it's when they say, that's it, we're done with this. We're going to stop trading it and we're not going to supply anything anymore. How many coins do you see get listed on Mexi or any other platform, and then they stop providing liquidity for it? They stop trading, okay? Because market maker's done his business on it and there's nothing else for them to do with it. They can't transact on it anymore, and then they're done with the business, all right? So yes, when it's going down and you make the assumption that it's buying, and then you think, oh my God, it's going to go up one time because they're buying loads of it. It's because the market maker has to do that because of the terms and conditions that it has with the brokerage that it's going to supply liquidity. Remember, market makers as liquidity providers, they have an obligation to the exchange to make sure that you and me can buy and sell that asset. They profit from the transaction. They profit from us using leverage, and they will benefit from that. Okay. But don't worry yourself too much about how the market maker is going to operate. What you've got to do is look at the market maker's footprint, because his footprint is so much more easier to understand. Let me give you an example. Market maker's footprint is easy to identify because they make it so easy for you to highlight. For example, anyone that's saying like Bitcoin right now is stuck in a range, it's not going anywhere. Okay. What would be the market maker's footprint? Well, his footprint would be here, this red vector candle right there. That's his footprint. Okay. Where else is there a footprint? Green vector candle right there, footprint. Red vector candle, footprint. So any other candlestick outside of that is nothing. It doesn't give you anything. And you look at Bitcoin and it's stuck in this range. It's terrible. It's just going sideways. There is no direction in Bitcoin. There's the guys that are like, yeah, I hope that it goes to X price. I hope that it goes here. Yeah, forget the hope. We're not interested in hope. Hedge fund managers don't buy on hope. Okay. They and all other players, they don't buy on hope. They buy on aggression, the speed of the candle, okay? Because that's all we've got. All we have is candlesticks, right? And we can't do anything else about it. Yeah, we can use other bits of data. We can use depth of market. We can use exo charts. I mean, we look at NASDAQ right now on exo charts. I look at NASDAQ and look at Euro all the time. And you can see NASDAQ is slowly bleeding out. You've got imbalances down here at 18,280. So that's a big area where the market maker stepped in, or should I say, there was a lot of offers being put in at that point. So we know that some point price could actually visit that area. NASDAQ rolling over, the Euro trying to make a little bit of a move up. You can see that disparity between the two of them. It's very interesting because NASDAQ is actually starting to go and attack these imbalances. Daily open test very shortly. Look how fast she moves, this absolute nut job. So yeah, like it's one of those previous days close, previous days value area low. They're going to be eating this liquidity because that's where they previously transacted. So if we go over to it, that vector candle, or should I say that imbalance, look at that. The book doesn't like an empty shop. Look at all those zeros. It doesn't like an empty shop. So logic says that I'm going to trade towards that logic and give myself the idea that maybe NASDAQ could go down towards that point. What it's done now, it's moved away from the VWAP, and it's telling me that we're in a sort of a selling cycle on the VWAP. So they're selling above the VWAP right there. And then that logic tells me that they could come back up, sell again, roll over, because they're getting rid of stock. Okay. Remember, when you see price breaking above the VWAP and not following through, it's because the following is happening. Remember when I said to you about being a hedge fund manager and you've got a client that wants you to sell. So here's the VWAP, and you think your client's going to be happy if you're selling down here. No, he'll be happy when you're selling at the average of volume weighted average price. Drop, sell, drop, sell, drop. And that's what the VWAP's going to end up doing. And you'll notice that when price hits the VWAP and it keeps on going lower, they're in like a sort of a sell program, okay? But fundamentally, hedge fund managers or market makers and the guys who play options and stuff, they will be hedging from these points, okay? They will transact at these points, fade it back down, fade it. So they buy below the VWAP and then they sell back into it. Buy below the VWAP, sell back into it. You might get some guys that have clients that are like, right, I want to get rid of some stock. And he might turn around and say, okay, we're going to try and do a little bit of a strategy here where when we see price correcting, we'll start adding to your position, but then we'll sell it again, coupled with your existing position at that point, just to get you a better sell entry and earn you a little bit of cash. They can do that, and they'll use the VWAP for that principle. Okay? Does that make sense? Does that make sense? I hope it does. Man, I've been running my mouth for a little while. What time are we on? Market is open, ladies and gentlemen. Market is open. Someone asked a question about BTCC for a split second. So if you haven't done so already, check out BTCC because you can trade NASDAQ and S&P and gold, silver. You can trade stock and what have you. But if you're using BTCC, okay, and if you go to the perpetual tab, futures tab, if you go to Pro, that's where you're going to get access to trading on Isolate. Top right, it says isolated right there. Change between cross and isolated, and you can obviously get your leverage, maneuver about, and do all of that fun and games, and then place your trades, and then happy days. Off you go with that flavor. But like I said before, the benefit of BTCC is the fact that you can trade forex, okay? You can run longs on euro maybe, okay? And you can effectively go short on the NASDAQ because they're actually selling US stock to go into European stock. You can have that play and go long on long on euro, short on the NASDAQ. You can go long on gold because the safe haven status is coming into play. We go over to gold right now and we can have a look. Gold's price right now is currently consolidating at these highs. We're getting ready for some more volatility with gold because investors are a little bit concerned about what's going on with the tariff story and the prospect of inflation. Remember, I said gold goes up when they cut the interest rates, but that's not the story right now. Look, bets have gone to 86.4, so they know they're not cutting the interest rates anytime soon. And of course, Euro's rates are being offered again. We just refresh this to see what's happened now that they've actually cut their interest rates to 2.4%. So we're going to just quickly have a look at that. Come on. Euro again at that point of control. Rough. That's a clue for you all right? Whenever Euro's at its point of control, when I'm talking about point of control, I'm talking about this. This is the depth of market on the Euro futures. What I do is I use the Euro futures and I take trades on MT4 just because of I can see the orders on the futures because forex doesn't have volume, but the futures does. And it gives me a clue about who's really prepared to buy and sell at certain points. And that's what a lot of people do. They use futures data to make trades in the spot market, the CFD market to exploit. Okay. So that's something that you want to take into consideration. But whenever Euro bounces at its point of control for the day in the futures, it usually ends up trading away from that point if the bias overall is to see Euro going higher. Okay. And we know that that's the story like right now because the dollar dominance itself is getting smacked to death and they ain't going to be having their dollars involved in anything. You can see right now it's going down. But then if we go over to the euro, it is trading at highs right now. It's not really doing anything too much. But when we look at the rates, you can see that they're getting awesome rates. 3.38% on a 28-day period, 7% on the Japanese yen. So that's something that we really want to be paying attention to. The yen is pulling back, well, was pulling back, but now it's starting to go up. But dollar yen itself is starting to do some interesting behavior. There is conversations with Trump about and Japan about forex. And when I say forex, I'm talking about forex intervention by the Japanese, where they're going to buy a load of dollars just to suppress the US dollar against the yen. But I don't think they need to do that because the yen is all, dollar yen is going down and it's not in any forex intervention environments. Forex intervention environments are effectively when the Japanese have to buy a ton load of dollars and convert them back into yen to deflate the value of the dollar. So those levels are effectively above 150. That's where forex intervention comes in. But we're not at those levels, so we don't really have to worry too much about that when it comes to it. What is this? Any other questions, ladies and gentlemen? I'm coming out with some madness today. Yeah, we're good with that. Tino, the level 1, 2, 3, etc. should be watching the shape or the price of the vectors. I ask because some people counting the group of vectors as a level. Look, there's various ways that you can trade the logic of the hybrid system, ladies and gentlemen. And if you are new to it, just go and take this free course so you've got a foundation of what to understand about the hybrid. Then alongside the hybrid, if you've successfully done this course, it's only an hour long. Once you've done that and you understand it's got modules about the vector candles from an entry level. But if you do this course properly, you'll have everything that you need with it. I'm serious. You'll have everything you need about this, about the hybrid system, and you've got to go back and practice. Okay. Once you've done that and you feel like you're more confident with the understanding of the system, then you can start looking at other things on the system that are strategies behind the hybrid system without it being a dark screen like this. So this is the PDFs. PDFs have got checklists, how to trade the vectors, how to do scaling in, how to do the V-shape principle. V-shapes, okay? V-shapes and W formations are my go-to every time. And the way I formulate a W formation is, for example, I look at how euro will behave at the lows of the profile. This is the depth of market, okay? I'm giving you game with this. This is the depth of market, right? Down here is the low of the profile. So usually when price is trading at the lows of the profile, that's where I can anticipate a W formation to form, where there is a psychology of who's going to be winning, the buyers or the sellers, who's going to really be winning, the bids or the offers. And if the bids keep on keeping price at these lows, then what I'm looking for is a big order down here to suggest that the bids are finished and now the bids are going to lift the offer and start selling into the offer, because when it goes down, they're buying, and when it goes up, they're selling, okay? So when I see price at these lows, I then go to the hybrid system and I say, okay, then can I justify that behavior by looking at a W formation? Okay. So then if I take Euro's price action today, just to put it into perspective, let's just go to the 1 minute time frame and understand that logic. So today, here is the actual low. Okay. You see that? There's your low, right? So you can see there is sort of a structure here, like a little W formation. So then when I'm looking at it from this perspective over here, I'm seeing price bouncing up and down, bouncing up and down. Then I'm paying attention to the number of orders that are coming in. So then when I see those orders coming in, I then correlate that to the chart and say, okay, there's been a big bid right there where they've swept the liquidity lower, and that's the red vector candle. And when there's a big bid and it fails to take out the low, tells me that the bids have just gone in for one more sweep of liquidity to effectively reverse price and move it back up again. And I anticipate that with the red vector candle. I can then justify that when I see the offers. Look at these. You see these there? Those blue orders? Look at how it's filled every single one of those tabs. So what does that tell me? Well, if you look to the left, the bids are sort of empty spaces there. So there's an imbalance on the bid because they aggressively came down to hit the orders. Well, that's a red vector candle right there. So I know that's an imbalance that's going to get recovered, and they're going to want to transact on the way back up. And there was continuous buying, 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 or should I say selling, 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 which effectively ended up sending Euro's price back up. You can exploit that. Those are things you can exploit. And they do this all the time. Go back in the charts and look at it. There's the same thing right there. Little mini structure right there. The bids came in, swept the lows, and then they just reversed back up again. You're complaining about what? If you caught on the green vector and it moved up 10 pips and you're putting down 50, 20, 30 lot sizes in forex, you're laughing. You're laughing with 5 pips, you know? But not everyone's going to see it like that. You've got to really put yourself in that position to take advantage of those things. And the only way you can do that is if you do train your eyes to go back and just find these structures and then take notes on how they develop. The free course tells you that. And then becoming a platinum member gives you more information on that logic. I wrote all of these PDFs, breaking it all down for everyone so that they've got something in their hand when they're trading and they can refer back to. Okay? Does that make sense, ladies and gentlemen? Do you trade on the 15-second chart? I don't really like to trade on time-based charts, to be honest with you. I look at where the vector candles are on smaller time frames because the smaller time frames give me where the imbalances occur, okay? Because you can't necessarily see imbalances on the depth of market, only if you look at the gaps in the chart. As I said a second ago on the euro, where is it? Here you go. See these gaps in there? Those are sort of imbalances on the depth of market where they're not transacting at that point, which will be no different to this platform right here on exo charts. There you go. So exo charts, where this imbalance is. You see this green stuff? Okay, so we go across and then go straight into it. And you can see here that you've got 0, 0, 0, 0, 0. Those are imbalances, okay? And there's the green imbalance, which is obviously price where they transacted. There was no one bidding. No one bidded on that move up, but that was the Trump candle in principle, if I'm honest. But that there is something that the market is going to want to try and transact back to at some point. Okay. Oh, Bitcoin, what are you doing? Ooh, Bitcoin. What are you doing, sir? All right, then. Are we cool? Tino, the carry trade will continue unwinding and make Japanese investors want to strap on and raw hit the market with no lube. What the fuck did I just read out loud, man? Can you not make these sexual innuendos, please? Come on. Yeah, man, Japan's going to rinse everyone off. I'm straight with you. Japan will pull out a number. If they do, actually, if they can manage to get a deal with Trump, then I think they may be reluctant to cut their rates. But they've already got slowing growth and they've already reduced their growth prospects anyway. So it's going to be an interesting one to see how Japan actually moves forward. But I know the carry is starting to unwind. I mean, oh, God, the yields are down. The NASDAQ, not looking good, bro. Why are you rolling over? Okay, NASDAQ's rolling. Here we go. Daily open. We said that. Wanted that daily open. It's not looking good today. Back into vector candle recovery, man. They will go to the imbalance. And when they finalize the imbalance, that's what I mean by trading back to vectors. Look at that blue vector candle right there. That's a huge imbalance. Well, if the balance is going to happen and there's going to be commitment, why? Well, the market will go there and test. And if it doesn't completely take it, this is where the block principle comes into play. It needs to look at how it just taps that top side of the vector. That reversal, little bit of reversal, you can exploit that on the depth of market. You know, 400 tick move, not 400 tick move, but, you know, you can get quite a decent amount of ticks on that movement there, you know, but you got to be quick. Tino's one of the prolific. It's all love. Thank you, Line. Thank you, Line. Tino is a madman. What a masterclass in understanding of the market as a whole. Okay, if you've learned something, please hit the like button. That's all I need you guys to do. If you've learned something, hit the like button. If you haven't learned anything, hit the like button. And if you just like hitting the like button, hit the like button. All right? Doesn't cost you anything. Tino, do you analyze VWAP, VWAP, and band VWAP close from the last days? No. What I do is I look at the VWAP at the point in time in the marketplace. I might take a session volume profile. I might take a fixed range profile, something like this. This is all from TradingView as well. Nothing special. And what I look for is, let's look at this accumulation zone. Okay, I'll start from the psychological high, go across. And then I'll say to myself, okay, then where are my points of interest? So I know I'm at the point of control right there where price seems to be respecting that zone. And it looks like it wants to try and come away from it. If price can sustain above that, then we're going to see a stop run to go back into it again. But you can see that we don't really have that much liquidity up here, stop run region, and it's come down, tried to reclaim that, found resistances. And then if I really want to start paying attention to the liquidity, I then say to myself, okay, if I'm a swing trader, what range do I need to take into consideration? So I'll then go to the last low over here, which is that low right there. And then I highlight the next areas of interest in the chart where I look at high volume nodes. And that's your nodes right there. And then I will correlate the VWAP to that. I'll start with the session weekly. I'll start with the weekly VWAP, and then I'll correlate the idea of where price could end up from there. So let's just put the weekly VWAP for a second. Here is an anchored VWAP. Start from the week open. So that would be at the psychological levels. The first price right there. And then there's my VWAP. So where's Bitcoin going? Nowhere. It's currently finding resistances and selling above the VWAP. They're buying below it, selling into it again. And then if they do lose this VWAP, Bitcoin will roll. You know, that's the logic. What am I going to show everyone my vector candle? Bruv, honestly, man, what are you guys talking about? Show you my vector. Damn. Oh. Could you explain the block prints, or the block principle? Right. Block principle is PDF. If you want more details on that, that's where you go. Become a platinum member. You'll get access to that, and you can read that to your heart's content. Okay? But the block principle focuses on the logic that you've got the market's memory being triggered. So here is another block right here. Okay? This block tells you that there's going to be something happening in here. What you've got to do is you've got to split the vector high, vector low. Do not include the wicks. Okay? And then you take the high and you take the low. How does price behave around this? So the logic says, if price comes back down to this block high and holds, then the logic of this block right here tells me that the guys who were previously bidding before this and wanting to offer out are probably bidding again here to then see price move up from that point. Alternatively, if price comes all the way back down towards this block right here where it started, then you're going to wait and see how price behaves in this area. Give it a little bit of freedom because it's Bitcoin. But the second it can get back into that point and trade in that range, you are then trading the logic that that's the point where they bidded aggressively and then they started the offering process to send price back up. So you then place longs at that point to then ride the idea of them going back up. And then when it gets back up to the top end of the block, you're going to assume that the momentum is going to continue and then hold until it continues to go to the next block, which the block resistance would be right here with the red vector candle. So now you've got a combined block, and then you can trade towards the block points and sell from those points. Look at how that red vector candle, I know it's hindsight, but this is the logic of the block principle. Look at how it kisses that top of that red vector candle block and reverses. Because the market's memory said that's where we're going to sell from. That's where we're going to bid from. And that's where it stops and then makes the reversal back down again. Okay? The block principle itself can save you from taking shit trades, and it can allow you to be more disciplined at waiting for certain things to happen. When you're stuck inside of a midpoint of a block, you know not to trade. We're technically inside of the midpoint of the red vector candle block. We have no range. If Bitcoin breaks above here, shoots above it, happy days, you're taking your longs. If it breaks down below here, you're taking your shorts. That's how simple you can go with the block. But as long as you understand that the block means that you're relying on the market's memory, because the market, when it hits a certain support or resistance, is because there's a number of bids and offers being exchanged at that point in time. It's not candlesticks, it's bids, it's offers, it's people who are committing money. How much more money was up there? How much money is going to be down here? And that's what you're looking for. Do you need to use EMAs to trade the hybrid? No, you don't. You don't need to use EMAs to trade the hybrid, okay? I'll give you an example and then I'll let you guys go. Here we are. So if I remove all the EMAs on the hybrid system and just have this, right? If you can't already see where there is deviation away from the moving average, then you might need to just have a little bit more screen time. Where's deviation away from the moving average? Here's one zone right here. So price moves away from the EMAs, okay? Here's another one. Price is moving away from the EMAs right here. And obviously there's a small ranges as such, but we've got a little one right here. See that one there? And any gap that you see where price moves away from, here you've got here, there's an EMA moving away from the EMAs, okay? Now, when you go back into it, you can see moving away from the EMAs, moving away from, well, not from the EMAs, did that reverse, but you've got EMA gap right there, and you just go back in the charts. Let's just do that again. So we've got other areas that we can identify. Here you go. You've got another deviation away from a moving average from that point, so it'd probably be up here, because EMA will probably still be there. So let's have a look. There you go. So there's the EMA. These little gaps right here, if you can't see them already without the moving averages, then you just need to get a little bit more experience in identifying it, okay? Even if you just go back in time and look at this, go back and take screenshots of these sort of structures, okay? It's imbalances. You look at it differently now. When you see that with a vector and then it comes back to it, go back and tell me that it doesn't recover it after you see a big move. Might not happen straight away. It might happen a session later or 4 or 5 hours later, but they always do it. The faster they move away from one point, the sooner they're going to try and come back into it, because there's been a number of orders being transacted at this point in time where market makers offered, he sold, and now he's buying back up again. And then look how long it takes it to come back up towards that point. Go back and practice it. And when you see this enough times, you'll then know that when you see big green vector candles coming into play, you're gonna, there you go, there's one there. You know, you're gonna see the same shit happening over and over and over again. It's just difficult to pin down the when. And then the only way that you're gonna identify it is if you do take the trade. You gotta get the trade in. You know, that's my logic. That's my logic. Any other questions? Could you explain how to make my body more? On that note, ladies and gentlemen, I bid you well. Platinum members, I'm going to be reaching out to you very shortly. But have yourselves a wonderful day, guys. I hope that lesson gave you any insight into what to do with the hybrid. Everything you need is in the description. Like the stream and no more sexual innuendos, man. Please. Maybe for the evening stream, you can have free run. Anyways, no. All right. Adios. Ciao.